Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots for the markets for today, Tuesday, March 29th. I had to make sure I got that right, Tuesday. Boy, the long week already. We do have a lot to talk about this morning. There is a lot of things that are moving right now. We've got an interesting week coming up ahead of us also. So yeah, Brian and I were kind of going through. There's just we're starting a minute late, but there's just so many things going on this morning. We wanted to try to cram in what we can this morning. I am going to drop in a link because we'll be back in 3 hours. And to do a full-blown session, if you're not registered, that link is in there. That'll be happening at noon Eastern. If you're not registered, register for that. But we are going to do a quick recap, or at least we're going to look what's setting up this morning, and then we'll see where things sit. And Brian will go through the entire market, and then looking forward for the rest of the week, because as I mentioned, there are a lot of things coming up this week. This morning, everything is being really driven right now about the news coming out of Europe. In Turkey, the Russia-Ukrainian peace talks appear to be making progress. Russia promising to back off their operations, and that Ukraine is offering neutrality, and putting that on the table to give Russia their safety buffer to deal with those concerns, which is what they were saying, what it was about in the first place. So while those talks are going well, what are we seeing? Well, one, oil is absolutely getting smoked. Oil is down below $100 a barrel, so we're seeing the price of oil drop. Equities all punching higher globally. Equities did well. We're looking for a strong open here in U.S. equities. And then the FX markets, the euro taking off, the yen taking off, strength in both the euro and the yen as we would expect. So lots to talk about. And then it's like we're going to talk about that for today. And then, as I mentioned, come back in a couple hours because Brian will go through. I mean, this week there are numbers galore. Wednesday, which is tomorrow, before we even go on, we're going to have the ADP employment numbers. So it's in the U.S., so we'll get a glimpse there. We've also got U.S. GDP quarterly. So what's the U.S. economy looking like at a quarter, for the quarterly number? Thursday, inflation numbers, PCE, the Fed's preferred measure of inflation, personal consumption expenditures. That's Thursday. And then Friday, it's the first Friday of the month, we're going to get non-farm payroll, so US NFP, and then the unemployment rate in the US. So this is the end of this week is going to be crazy. So this morning, interesting on what's going on with the war, and then definitely come back in 3 hours and hear about what we've got for the rest of the week. Before we jump into the charts and we go through some of the headlines, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Just to give you a glimpse as the news comes out. I mean, this is all but 30 minutes ago, 20 minutes ago. Peace talks going well. Oil from 108 down to, it did bottom out below 99. I mean, that's just a move. So we're going to have some fun looking at technical levels in oil. But again, currencies as well. The euro punching higher, the yen punching higher, and then equities all green across the board. So Brian, here, let me turn your, there we go. Boom. Yeah, let's jump into it.
Yeah, I mean, it's definitely within, I'd say, the last hours when a lot of the data came out. There's been some corrections with it. Again, the translation software doesn't work the best at all at all times. Russia said they're not halting their offensive; they're scaling it down a bit. But they came out with the corrections as we're not halting it; we're just slowing it. So they wanted to be clear about that one, that it's not stopping. Overall, the peace aspect of it is great. In looking at it, it'll be interesting to see. They're saying that now is the time, whenever you talk to it, it's definitely a little bit conflicting still. And I think it's important to bring up because I think there could be some reversals there because of it. the top Russian negotiator basically says that, yeah, we have all this data, and this is the wrong one, but he basically says, I'll bring it to Putin now. So it's like, oh, wait, it's not done. He just says it went well, and I'll bring it to Putin, but we don't really know what Putin, is going to come of it. From the Ukraine side, they agree that, yeah, it was good. Obviously there has to be peace across before we come to a final agreement. I think that's there as well. And they do mention that obviously the big areas is going to be Crimea, which I don't think Russia's giving back, and then the Donbas region, and then the one other one that I can never pronounce. Those are areas that obviously, they said that we would pull back, but only until February 24th or whatever, which I believe is when Russia was controlling those. I don't know. It's kind of what we mentioned. I mean, I don't think Russia has any problem pulling back if they can get the guaranteed neutrality, never have NATO, and slice off those two regions. I think that's what Russia's original goal actually was. If everybody says that, hey, listen, we're beating, I feel like that's what's on the table. And again, Zelensky said we're not giving up any more land, but I feel like Russia's not gonna. Again, the Ukraine didn't own and didn't control that. I guess they owned it technically on paper, but they didn't control it. The rebels had both those areas. So that's going to be the big piece of it. So at this point, it's like, yeah, we're going to send it to Putin and we'll see what Putin wants to do with it. Because of it, obviously, the VIX, obviously, let's go across over here. This is obviously shooting way down. Now, again, my VIX is delayed about 10, 15 minutes. So it'll shoot down more than this. Yesterday was a big day as well for bringing the VIX down. As you would expect, all the indices are up. Now, I think the indices up are very interesting. It doesn't really matter which one we look at. They're all kind of at the same last 30 minutes. They're kind of popping higher. The thing I think that's very, very interesting about any of the indices right now is, yeah, peace is great. But if you remember, what do we have? What's the talk last week was interest rates. The Ukraine situation was the only reason why they didn't want to go start doing 0.5s. If there's peace, does that mean that 0.5 is now back on the table? And will it definitely be? They were already mentioning it, kind of get this ready for it. Well, if there's peace in the Ukraine, what other excuse? I don't know.
What are they going to come up with to not give us what we need to?
Yeah, they'll make something up. So that's going to be there. But the markets, particularly currencies, are expecting exactly like what you would assume. Obviously, the euro up, euro pound up, 90. That's what you would expect. War is slowing down on their front. All the risk and contagion that they did have, this is slowing it down a little bit. The yen also taking off, and again, the yen is kind of we've heard so much about the yen is it's bad, it's so horrible. But then any of the yen-based pairs are just literally, I mean, if you look at it here since that announcement's been made, this is 135 pips in 1 hour. So basically 2 daily ATRs all the way straight back down again. There was some opportunity to get in right before the news came out. And it doesn't matter which pair, even the euro yen. We know how strong the euro is right now. Even the euro yen right now took a 98 pip drop in 30 minutes based off of that news. So it's funny. All we hear is yen is so bad, but now it's all strength this morning. Pound yen, same thing. Again, the candle looks the same, but you take the entire move, it's about 140 pips. So huge movement. Even the dollar yen, same thing. The dollar yen actually was one of the bigger ones. 125 pips. So they're all kind of smashing through things. And again, that's when you have some type of a peace deal, that makes sense. Now, oil's the other big one. Oil is getting cranked. Now, oil, we had talked about grinding down that level between 108.30 and 107 were big deals. And it's interesting. It actually based in there, came back and took a re-entry. It actually, yesterday at 4 p.m., it actually dinged up the target that I'd mentioned yesterday of looking at 103, really 103 flat. I don't know why it went to 103.01. And then, interestingly enough, in the overnight session, it drove all the way back up again, right to 5:30 in the morning, came back and grabbed that same level. And then the deal of, hey, listen, we could have peace, and then sliced it down, and it dropped $8 in a matter of an hour. Now, what I think about this one is I just laugh. Yes, oil should be down. Do you think Russia is suddenly going to be everybody's best friend? I don't think so. No. And OPEC Plus, who was speaking on Thursday, is going to look at us and say, hey, listen, in the last week, it's dropped $17. Our job is price stability. Do you think they're going to start producing more this month because it's already dropped this much? No. So it's very interesting when you see this. I think really these big drops here, I think this is looking for opportunity. I mean, G7 yesterday says, yep, we are not paying rubles for gas. And I don't think Russia's going to be like, okay, great, we'll just change our mind. I don't think they're going to change their mind on this one.
Yeah, there's a lot of so much unknown there. Now, I mean, the uncertainty of how long is this war going to drag out, but yeah, there's going to be fallout 100%.
Yeah, I mean, as soon as the war's over, do you think the United States is going to lift all their sanctions? No.
No.
No, I mean, he's already said we're going to do this to, to hurt them from ever trying to do this again.
Or Europe. I mean, is Germany going to say now, you know
No.
what? We're not
Nope.
going to go look for independence from Russia fuel. No, they're going to look for
Nope.
independence from Russia's fuel.
Absolutely. So
They're not
this
going to
is what I
stop
would
that.
call, yeah, I mean, this is the ultimate parabolic retracement, right? This is the ultimate move based off of news. And again, has anything really been decided? No, they said, well, we're going to send it to Putin to see what he wants. Well, we know what he wants. And originally that wasn't enough. Now, supposedly it's going to be enough. I mean, especially if it's going to be deemed that he's losing because he didn't take all of the Ukraine over. I mean, he's getting kind of what they said was their initial objectives with the whole thing. But he's been slammed. There's been sanctions. People's yachts have been taken. They're not giving all the boats back, guys. They're keeping those boats. Um, I think they're gonna drag their feet. I think if we can find a decent basing level down here, and again, we can see that it's really pulled back into an area that's not really there's not really much in there demand wise. I think as soon as we can get a decent bottom, I think we have a retracement back, and I think we, probably go back up. I mean, what if Putin says, "No, that's not going to work for me"? Then none of this really mattered, and it rallies back up again. I think between the API report we're going to get later on today, and I think OPEC Plus is going to basically tell us to pound sand again. Hey, listen, they've lost $15 a barrel in a week. They're not going to be super motivated to say, you know what, we're going to produce more. Let's drive it even lower. That's great. That's not how they function. So I think you should be absolutely looking for opportunities to find a bottom in oil and go long. And again, with Nadex, with this big of a move, a lot of knockouts just got stopped out. Go in there and start looking for some knockouts and maybe even some longer duration contracts. I think we have the ability to go higher. All the commodities, natural gas also taking it. And again, now that the cold is gone, is there. Gold is another one. Gold has been taking it, but we mentioned a little Harry Potter trade here. You can see all the basing that says, "Yep, it's going to break," and bam, we ended up tagging that below 1900 there. And that actually started in the overnight, right? We had talked about this, again, potential areas that take new shorts, and it came through. Now we're all the way down to this level, and you can see if this is the bottom, we now have some new levels at 1930. So, with Ukraine, and people may say, why the heck is gold going down? Well, with the Ukraine conflict being gone, it goes back to the interest rate
Yeah,
scenario.
we forgot about that inflation
There
thing.
goes that excuse.
That
Okay,
inflation thing.
yeah, you got to go back to your card game and be like, okay, what excuse? Pick another card from the excuse deck because they're running out. And silver, I'm happy to say, I've been calling for this for a week and a half, 2 weeks now, guys. Silver at 24, we just dinged off 24. Yesterday, we'd mentioned that now we got a little bit of a pullback. If we can break through, we just hit 24. So there we go. It took me a little bit longer. We mentioned the two profit targets. You can see if I extended this one across, there's my horizontal line. Look at all the basing right before that target. It hit it and base. It's like, oh, here we go, here we go, here we go. Broke through, and we just tagged the 24. So, and again, gold and silver, I think, are in the same scenario. Again, with no excuses. I'm pretty much saying that 0.5 is guaranteed at this point. Right now, again, we have numbers the rest of the week that will really kind of help solidify that 0.5 in. But I really think that the market starts to find it's raising now. Because again, the uncertainty of the Ukraine was going to be one issue. I mean, I don't know. Maybe they'll say the uncertainty over oil now because we have to pay in rubles and we're not going to do it. It's like, oh, if you need the gas, you're going to do it. So
Yeah.
it just kind of comes down to that. So very interesting day. I would expect, obviously, the initial response for all the markets is going to be green. The VIX is down. They all look the same. They all have a big surge. But again, if we hear any additional talks about this, I think, again, no war is obviously great for the indices, but at the same time, the one factor that is weighing on the markets the most is what is the interest rates change going to look like. This was the final nail in the coffin as far as we have to do a 0.5. It's going crazy. So, again, I think the open will be pretty interesting. I think we do have a retracement. I think things come back down. I think overall, it's, piece is definitely positive, but, that positive piece is removing the, kind of could be the last little kind of, thumb in the dam there as far as what really needs to happen in the economy. Because again, peace does not get rid of all the inflation. It doesn't help the demand for oil. It doesn't help the G7 voting that we're not going to pay in rubles, and Russia saying you will pay in rubles, even though you've sanctioned the heck out of our economy. So,
and I'm telling you, Europe is not going to stop their
no, absolutely
their
not.
move
No,
towards energy independence from Russia. They're just
nope,
not going to have that hanging over their
no,
head. So I mean, some of these things are permanent changes,
yep, yeah,
and it's
absolutely,
so we still. I mean, you're absolutely right. Some things happened. While
yep,
peace would be great, and we'd love to see lives not getting lost
yep,
and some stability come to the region, there are going to be permanent consequences,
yep,
and that's just the way it's going to be. You can't go back. So
yep.
Yeah. So yeah, that's a lot that we covered there this morning. It gives you a taste. We're going to see what happens when the open comes, what the U.S. retail trader thinks in 29 minutes. But I want to encourage everyone: come back in 3 hours. I dropped the link in. Register. Come back in 3 hours. Brian's going to be able to take a look at an analysis on what's happened since the open, digest some of that, and then again, it's looking forward to the rest of the week, where we've got again tomorrow. The ADP employment numbers before in the morning. We got the U.S. quarterly GDP number tomorrow. Thursday, PCE. I mean, that's going to be huge. We're talking about inflation. If we're going to start putting war behind us and we're going to start really looking at inflation, that is the Fed's preferred measure of inflation. That is Thursday, and then Friday we got the U.S. unemployment rate and non-farm payrolls. So a lot this week. The rest of this week is going to be an interesting week. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also very accessible. If you'd like to chat with us, if you've got questions, insights, more clarity, a little additional help, people do email us. Brian and I answer our emails. My email is todd.rich@nadex.com. If you need some help, I mean, Brian does even coaching and mentoring. He's got, please use him as a resource. He's available. Support at keeptradingsimple.com. And there you have it. Really, what we talked about this morning. Right now, it's all about reaction to the war news. Are they going to? Is this going to actually work? Russia scaling back the operations, not ending up scaling them back. Ukraine putting neutrality on the negotiating table. The equity markets are up. Euro and yen both headed higher. Oil getting crushed at the moment. With that, Brian and I will be back tomorrow morning. Hopefully you join us in 3 hours. If not, we'll catch you tomorrow morning, and good luck in the markets, everyone. Thank you so much for joining. And by the way, and if you like what we're doing, please give us a like on Facebook or YouTube. I like to throw that in every once in a while. We do appreciate that. We will catch you later.